This conference will now be recorded.
We're going to do a trial recording. And good morning, everyone. On behalf of, let's see, I got to get up here. On behalf of Doug Theobald, Patrick Leary, Lisa Behan, and myself, we welcome you to our second presentation in this series. Lisa will be joining me with commentary. Lisa just did a seminar yesterday or Monday, I think it was, so she may have some additional insights to add on occasion. I think somebody doesn't have a muted mic. Now that seems to have gone away. We're going to try and use the chat feature for questions. So if in fact you have questions as you go through, when I turn it over to Lisa for her insight, I am going to try and look at the chat quickly and see if there are questions that I should address at that time. If I know I'm going to address them later, I won't address them till later in the presentation, but that's how we're going to try and do questions during this warm-up round. This is called the agenda. It's really basically a table of contents that will go through everything. Ashley, this may have to be adjusted also. I might have adjusted some of the slides at the end. I did some work this morning to get as much up to date as possible. And let's begin. EIDL. A lot of people have this loan or this grant that was received. Many were supposed to receive it when they first applied for the PPP loan. It was originally thought to be of $10,000 per loan application. They later changed it to the lesser of $10,000 or $1,000 per employee. This loan is not forgivable. And they have you put this loan on the worksheet or on your PPP forgiveness application so that the amount forgiven will be reduced. The amount of PPP loan forgiven that you have to ask to have reduced will be lowered by the EIDL loan. IRS ruled that according to the guidelines that PPP loan forgiveness is not taxable income. However, at the same time, the IRS said whatever expenses you use to apply for loan forgiveness, all of your payroll, all of your non-payroll costs are not deductible expenses. So match the items of forgiveness, don't include the forgiveness as income, don't take a deduction for any expense included in the forgiveness. So therefore a wash, no income, no expense. Congress was originally not pleased with this IRS ruling, but as of today, as of the date of this presentation, Congress has done nothing to change that. So the IRS rule currently stands. We know that Treasury supports, IRS is part of Treasury, and Treasury, of course, supports this IRS ruling. So that's what it looks like at the moment, that the forgiveness will not be income. However, anything of the expenses related to the forgiveness will not be deductible. What did the House do? The House passed a bill 417-1 on May 28th. What did the bill do? It took the 8-week covered period and extended it to 24 weeks. It increased the 25% portion for non-payroll cost to 40%. It added a line item, a different type of forgivable cost for PPP related expenses. It extends the repayment period for the portion of the loan not forgiven from 2 years to 5 years. It extended the FTE safe harbor. And what a lot of people have not taken advantage of, and I had the pleasure of speaking to a client about yesterday, was that it extends the payroll tax deferral. This is something we covered in the last presentation. It has to do with the employer's portion of the Social Security tax. It was originally scheduled to end for people who had the payroll, the PPP loan, when the amount forgiven was declared. The House bill extends that all the way to the end of the year. It is not being taken advantage of. It's much to my surprise. Few people are taking advantage of this provision. Remember, any deferral is repaid 50% December 31st of 21, and the other 50% December 31st, 2022. So it is quite an advantage. The Senate was expected to vote on a bill the Thursday before Memorial Day. They were going to extend the PPP period from 8 weeks to 16 weeks. I don't know if they were changing the percentage of the non-payroll cost at all in that bill. The Senate has done nothing yet. Treasury is pretty adamant that they still want the non-payroll costs limited to 25%. So this is still has become a political football, not surprisingly, and we're awaiting guidance. Some reminders: what happens if the loan is not forgiven? You are assessed a 1% interest rate. You have a 2-year repayment period. No repayment is expected until month 7 of your loan. Recall, if you use your funds for unauthorized purposes, that must be repaid. And remember the key date. The key date was the day you received your loan plus 8 weeks. I had to change this from my original seminar. Somebody pointed out a flaw in it. I originally said if you received your money on April 15th, it went to June 10th. It in fact only goes to June 9th. So as of today, I have to tell you, it is still an 8-week period. We will see that SBA was very borrower friendly in allocating things over 8 weeks. We're going to see 8 weeks really isn't 8 weeks as we get into our presentation. Forgivable non-payroll costs. This is just a reminder as to where we're going. What is a forgivable non-payroll cost? Remember, there are 3 types, and all obligations must have originated before February 15th. Mortgage interest. It is clear that is any loan that is secured by real or personal property. To have a mortgage, you must have security. And it is clear in the law now. It wasn't crystal clear before, but now it is clear. The both interest on both real and personal property qualifies. Principal payments are not allowable cost. As I said earlier, I would think most people have worked with their bank to have principal deferral or the like. Because most credit lines are in fact secured, I would expect most interest on credit lines to in fact be a forgivable cost. Moving on to rent. Again, crystal clear now, both real and personal property rents qualify. As long as the lease was involved or was in place prior to February 15th, 2020, these rental payments will qualify as loan forgiveness. Follow the lease carefully, especially when you have common charges and escalation charges. Pay those during the 8-week period if you can. Leases, this is still correct. Leases with related parties still qualify as a forgivable cost. Little bit of a opportunity here for many people, but related party leases still qualify for forgiveness. Will the banks and will SBA require a written lease? The technical answer is no. I think it is still best to have one. I had the pleasure of helping a client update a lease the other day to make sure it qualified for PPP purposes. There are 7 types of utilities that qualify for forgiveness. electricity, gas, water, telephone, internet, and transportation. To my knowledge, transportation still qualifies, or the only thing that qualifies under transportation is fuel for business vehicles. When we get to the forgiveness application, you'll see that utilities is just one line item. You have to put support, I guess, for that line item. So maybe that's not the correct best way to say that, but it is transportation for now is just fuel for business vehicles. Forgivable payroll costs, it is still payroll and payroll only. A lot of people wanted to have independent contractors, Robert Half type people, temporary workers put in the mix here. That is still not the case. It is only your reportable compensation that counts. Wages, commissions, tips. If you have tip people, you can estimate what their tips have been and continue to give them that pay. Vacation pay, hazard pay, retroactive pay, retirement pay. Basically, they have allowed anything that goes on the W-2 as reportable compensation to be allowable for forgiveness with a few exceptions. The exceptions are everybody for an 8-week period cannot exceed $15,384. You have to remove anyone whose residence is outside the US. And if you have people on sick leave or any sort of family first leave or payroll release, payroll reimbursed to you under the Family First Act, that since it was reimbursed, it is not payroll to you. So you should reduce your payroll by the amounts reimbursed. What did they mean by employer, state, and local taxes? In Massachusetts, they meant state unemployment, and in all states, they meant state unemployment. Massachusetts, I believe the family leave portion of the tax also here qualifies. And what causes a tremendous amount of confusion is the federal payroll taxes. The Social Security match, the Medicare match do not qualify. Also under forgivable payroll cost, we have group healthcare coverage. Still not really defined what they mean by group healthcare coverage. Does dental count? Certainly medical insurance counts, right? Does dental count? Does disability count? They've given us no guidance here. Same thing with retirement benefits. The only thing that I've read that is pretty crystal clear, that is if you are matching the employer retirement, the employee retirement, if you are matching that, that is certainly a forgivable cost. Can you take your PPP payroll and give a profit sharing contribution? I can't say for certain that you get that deduction, or that is a forgivable cost, is the better way to say that. I got to remember we're talking about SBA rules here and not the tax code rules that I talk about so often. So I don't know. Would I try it? I think I would try it because we don't have any guidance yet. Will we have guidance? I hope so. And when we do, we'll pass that information along. Lisa, give me a second here. Anything that you have that you want to add at this point? Any insights or?
I only on the contributions. I've seen commentary that we're going to get into the self-employed and owner employees later, but that self-employed SEP contributions would qualify. SEP contributions on year-to-date earnings would qualify. So I think I've heard that profit sharing, or I've read that profit sharing contributions will qualify.
Okay, that'd be huge. I mean, it makes sense to me that they will, and we'll see. So I opened up the chat, and this actually worked very well. Laura Hodges, again, I met you yesterday. Nice to meet you. Are cell phone stipends paid to employee considered in phone cost? I think they are, Laura. I think they are. I mean, if it's a normal cost, if you were doing it prior to February 15th, I think you can continue to do so after February 15th. You know, it's a standard operating procedure for your business, so I do think that works. So now let's go to the overview. Most of everything I did was either updates or recaps to make sure we're all on the same page again. On May 15th, SBA released an 11-page PDF, the loan forgiveness application. You have the website there, the link there, I guess that is. Whenever I refer to, you'll see below that there's also a May 22nd SBA release that was 26 pages that kind of explained the 11 pages. Whenever I refer to pages on an SBA document, I will either refer to May 15th or May 22nd in case you want to go back and follow what I'm referring to and what I'm speaking to. The key areas with the loan forgiveness application, loan 3 is the forgiveness application form. Page 4 are 7 certifications that you have to initial and signature. This is similar to the loan application. The application will be submitted to the lender. Nothing in either guidance, either the May 15th guidance or the May 22nd guidance, said to us when the due date for the application is. When must you file for forgiveness application? But be certain, even if the Senate changes things, this is something you still will have to apply for forgiveness. And many commentators that I've listened to over the last few weeks have said you might want to bring somebody in on staff who has MIT capabilities to help you figure out this loan forgiveness application. I don't think that I mentioned, and I wish I had, when I sent out the invite to this morning's, or when I sent out an email this morning to everybody on here, you should have 2 attachments there. One is this PowerPoint presentation, and the other is 4 selective pages from the May 11th 11-page PDF loan forgiveness application. I will be going through that a little bit later. I've already touched on page 6, the first page that I put in your May 11th, your PDF attachment are all the certifications. So you can look at that should you choose to now. I believe they are the same as was in the original loan application, same certifications. So with the submission, there are things that are required to be submitted. Page 3, the loan forgiveness application. Page 4, the certifications along with the signature. Page 6, which is the Schedule A. There's a Schedule A and there's a Schedule A worksheet. There's optional schedules, the Schedule A worksheet, which is summarized into Schedule A, and page 11, which is demographic information. It doesn't appear to be much of a schedule. I haven't spent any time looking at it since it's optional. It talks about where your business is and you know, who's employed or the like. Payroll documents to be included. Proof of compensation. They referred to things such as bank account statements or third-party records. They also referred to payroll tax filings, which would be Form 941s, state and quarterly reports. I'm assuming for Massachusetts taxpayer, Massachusetts borrowers, they're going to want to see the WR1, which lists all the employees and what they got paid, and the state unemployment forms. Which is really interesting about this is none of these things are going to match up. So while the 941, of course, records the reports the quarterly payroll and the quarterly payroll taxes. Certainly the PPP loan and what you're going to be asking for forgiveness from does not tie in neatly into this quarter. So they have said, however, they want this additional information attached. For group healthcare coverage and retirement documents, they want payment receipts, canceled checks, or account statements. So it sounds to me like if the bill for your group health coverage will suffice, it sounds to me like your retirement payment document, the attachment that you give, will suffice. Why the term canceled check is still used, I don't know. Isn't everything on microfiche today? So, but that term was in there, so I used it. Also included with the submission must be FTE documentation. Recall that one of the tax traps that I referred to in my first seminar is if the FTEs were reduced. So required submission, they want the average number of FTEs, and we're going to go through this a little bit later. What is an FTE, how to calculate it for the period of February 15th to June 30th of last year, 19, or for the first 2 months of this year. That should or could come into play with the FTE reduction trap. What documents are in the PDFs that they want for mortgage, interest, rent, utilities? They want something that verifies the existence of the obligation prior to February 15th, 2020. One of the things they suggested was give them your mortgage bill for February 15th to show that you actually had a mortgage bill at that time, and then also give them the bills that you are seeking forgiveness of. Same thing with rents and leases, and same thing with utilities. So to recap or to say it again, you're going to want to give them something that shows that the obligation was in fact there on February 15th and continues to be there during the forgiveness period with those statements also. Again, I can't wait to show you that the 8-week period is again going to be extended. You're actually going to show more than 2 weeks worth of bills here. Documents that you are required to maintain. And believe it or not, they want you to maintain these things for 6 years. These are documents you must keep but not include with your submission. Necessity of the loan request. That goes back a lot to the certification. Did you in fact need the loans for your business operations? And were you eligible, otherwise eligible for the PPP loan? You had to be under 500 employees and some other minor requirements. You will also need to maintain, and we're going to get to this, the Schedule A worksheet. And this will show salary, wage reduction, FTE calculations. It's, again, I'm going to go back and say it's the MIT portion of this worksheet calculation or this forgiveness application. Since this is the practice seminar, somebody note that I don't know what I meant by page 6 there. No, page 6, I'm sorry, page 6 is the, if you want to go back into the, I'm not sure that's the correct reference. Somebody remind me to take a look at that later, please. Lisa, I'm going to turn it to you again before I get into covered period. Anything you want to expand upon? Anything that you want to go over? No additional chat questions have come in.
Bob, will you be circling back on non-payroll items at all? Yes, you will. Slide 19. Yes.
Lisa, you got a help, not an echo, but you sound like you're in a tin can. They're a very spacious room when you're speaking. It's hard to hear you.
Well, the way you're referring to our offices in Bloomfield, Bob, it's not a tin can. It's a very nice pipe. I'm in the office, so I'm sorry if it's not coming. I don't know, there's nothing else I can do, but
Okay.
you'll be talking about non-payroll costs and the and sort of the accrual or the prepayment of those later on, right?
Yeah.
Okay.
Yeah, we'll get to those. Thank you, Lisa. Went through this, we went through here. Covered period. Okay. The 8-week covered period. I put it in quotes because it really doesn't mean a lot. But for payroll items, for non-payroll items, it is still the loan disbursement date plus 8 weeks. Okay. However, see incurred or paid slide 17. Ashley, as a heads up to you, I'm pretty sure slide 17 is no longer the correct slide. For payroll items, it's the loan disbursement date plus 8 weeks. I should put 8 weeks in quote there also, Ashley. Or if elected, if you have a weekly or bi-weekly payroll period, you can elect an alternate period. And that alternate period is the first day after you receive your loan, the first day of your pay period. And you'll see an example there. Funds received on Monday, April 20th. Payroll week runs Saturday to Sunday. Alternate payroll period is Sunday, April 26th through Saturday, June 20th. What they believed, why they put this rule in, is they thought that this would make it easier to comply, especially the payroll reports and the like, if they gave you the alternate date to run for the pay period. So that's why this is in here. What it does is if you elect the alternate period, you have 2 different 8-week periods, certainly. The non-payroll item being date you received the loan plus 8 weeks, and the alternate period for payroll periods. Ashley, once again, if you look at this, I don't believe slides 18 and 19 correspond anymore since I added some this morning. Okay, this is where the fun really begins. So we talked about a headcount trap or an FTE, a headcount reduction trap or an FTE calculation. What they want you to do is calculate the average full-time equivalent by employee and round to the nearest 10th. So every employee that you had, you will have to do this for. It's a lot of work to do this calculation. They've used 40 hours for FTE purposes. Overtime is not taken into account. So if somebody worked 45 hours, it's 1 FTE. If you don't want to use the nearest to the 10th calculation, they've come up with a quote simplified rule that would apply to each and every employee. And under the simplified rule, you can account for everyone who worked 40 hours as 1 FTE, and you can account for everybody who worked less than 40 hours as 0.5 FTE. Okay, now I'm hesitating here for a minute because of course this is still brand new to me too. You're going to have to do this for at least more than 1 period. You may have to do this for as many as 4 periods to choose the periods that work best for your forgiveness purpose. There are some exceptions, right? A lot of people were on unemployment. The PPP monies came out later than they had hoped for. So, and the employment benefits were beneficial to employees. There was an extra kicker there. So a lot of employees didn't come back. SBA has ruled that these individuals, these employees, you should not reduce your FTE for these individuals. Who are these individuals? One is if you made a written offer to rehire the person rejected the offer. The kicker they threw in here was unemployment must be notified within 30 days. You're supposed to keep documentation for all of this. This is non-submitted, just maintain documentation. Also, employees who fall under this category are employees who were fired for cause, who voluntarily resigned, or who voluntarily requested and received a reduction in hours. Again, because this is a draft, somebody note for me here that I should put the page that these rules are found on so that people can trace back to it when they need it. We're going to get into this in a little bit, but know that owner employees are not counted anywhere in the FTE calculations, okay? So good luck to everyone, especially when they're going back in time. As you will see, you're gonna have to do FTE calculations for back in time. The reports that you think you have or think that you may be using are gonna have to be adjusted for FTE purposes. The payroll companies really have been wonderful in this, but I don't know. I mean, these are some crazy, crazy, crazy rules here that I wonder if they're going to be able to be up to date on and to be able to do the calculations on. Recall that FTE reductions will reduce the amount of the loan forgiveness. When will you compare FTEs to? We learned this on the first presentation, that you compare your FTEs to the period February 15th of 19 to June 30th of 19, or the period, the first 2 months of this year. So recall I said earlier, you might have to do a bunch of FTE calculations. These are the FTE calculations that we already know that you will need. You know, in my guess, again, just a guess, is that these provisions will still be there even when all Congress gets done adjusting the law. There is nothing out there right now that says this FTE reduction is going to go away. Treasury is pretty adamant about that. I'll give you some insight on that. I think I already did. The Treasury still wanted the 75% of payroll to be the magic number. So I don't see these rules going away. And I give you an example here. If you had 20 FTEs during the baseline period, your baseline period is what's referred to above either of those two periods, February to June, the first 2 months of this year. And during the 8-week forgiveness period, it fell to 18. That's a reduction of 2 or 10%, okay? They also threw in a rule that's far more complicated than it needs to be, and it's called the FTE reduction safe harbor. And apparently, if you fit this safe harbor, you don't need to do any of the other calculations. The other calculations being the baseline periods referred to above. This calculation applies, or this reduction, safe harbor reduction applies if your FTEs were reduced from between the periods from 2/15 to 4/26/20. So did you have a reduction during the first couple months of the COVID crisis in March and April, late February, March and April? Did you reduce your FTEs? If you did, and as of today, if you restore these by June 30th, there is no FTE reduction, okay? Is there a lot of guidance out there on this that says if you restore the FTEs by June 30th, but then say after July 4th, you have to terminate a lot of employees or furlough a lot of employees? There's no guidance out there on this. What it currently says is what's written there. If you've had a reduction between February 15th and April 26th, and you restore it by June 30th, the payroll that includes June 30th, you are safe harbored from the FTE reduction. Pay rate reduction. The pay rate reduction, there's a 3-step calculation here, and you can find this on pages 7 and 8 of the May 15th SBA document. The reduction applies only if you reduced your employees' pay rates in excess of 25%. Okay? You compare the pay rates that you were paying during the covered period again being the period that you were asking for your payroll forgiveness on, and you compare that to the pay rates between January 1st and March 31st. What is this safe harbor? This safe harbor is, again, if the pay rate was reduced under the same time period we just saw, February 15th to April 20th, and it's restored by June 30th, you have a safe harbor and you don't have a reduction in your loan forgiveness due to a pay rate reduction. And I know it sounds like I'm talking gibberish, and it sounds like I'm talking Greek, or it's just very difficult. This is what's in the language, and this is why, again, I'm referring to it again as the MIT professors trying to figure out what's going on here. Lisa, I'm going to turn it to you for a minute, and I'm going to read some of the chat questions we have.
Thanks. Okay, Bob. Just on the pay rate reduction and the FTE reduction, you'll see later when we go through Bob's example that the FTE reduction casts a wide net over your forgiveness amount, whereas the pay rate reduction is on an employee by employee basis, and you might receive a reduction in forgiveness for a particular employee whose pay rate is reduced. Keep that in mind as we go forward.
Excellent. Annie J asks, are auto allowances covered under the PPP? If auto allowances, if you need to turn your microphone on, Jen, go ahead. Are you referring to whether or not it's put on payroll? Certainly if it's put on payroll, it is. If it's included in payroll, you're saying, but are you saying does it qualify under the utility as an auto?
I'm not sure utility or under the payroll, but yeah, either. Does it qualify at all?
Well, certainly if it's part of compensation, it certainly qualifies. If it's a non-accountable plan, it certainly qualifies. Does it qualify as a utility? That's a great question, because the only thing that's supposed to qualify is the fuel. So I'm going to say probably not under utility, definitely under payroll.
Okay, perfect.
Bob, can I jump in here, Bob?
Please do.
I've seen some commentary regarding the non-payroll piece of transportation costs, which said that it's beyond fuel that would be included in transportation costs. So we should be on the lookout for any more guidance or literature on that item, and because in that case, you might be able to pull in more vehicle costs.
Yeah. Laura has more wonderful comments here. She's thanking me for the cliffhanger. I do that on purpose, Laura. I'm glad you picked up on that. For staffing refusing reassigned position, it was consequently released because the position was eliminated. That's a heck of a question. Is it a voluntary resignation then? I would try and get that under the voluntary resignation. She asked another question, is the restored FTE, does it have to be the exact same position or person? No. But if you've got another person, they don't want you to double dip. So if you've hired somebody new for that same payroll week, you can't count the new person and the person who was terminated. Okay, that was in the slide. I didn't necessarily go over it, but they don't want you to double dip here. You can't bring on the new person and at the same time count the person who was voluntarily let go or not coming back to work. Okay, owner employees. This has been clarified, and there was something that I never saw coming, and it is there. Again, pages 11 and 12 of the May 22nd SBA, not the May 15th, the May 22nd. What are these rules attempting to do? These rules are attempting to limit any increased compensation over the 2019 levels, okay? They don't want owner employees who only made $50,000, $60,000, $70,000 to now get $100,000 of payroll during the PPP loan period. Okay, so what did they do? Sole proprietors. You take your Schedule C net income, your 2019 Schedule C net income, which is line 31 of the Schedule C, multiply that times 850 seconds. Of course, not in excess of 15,385. That is payroll, quote unquote, payroll for the sole proprietor. They gave you a different rule for general partners. Okay, general partners, you use your 2019 self-employment income, which I believe they didn't give this is a bomb, but not necessarily a standard guidance, but you look at your 1040 Schedule SE line 4 times 850 seconds, not to exceed 15,385. So in my initial presentation, I said, make sure that general partners receive quote unquote payroll during the PPP loan forgiveness period. That turns out to be inaccurate. For general partners, you use the 2019 information. And now I put this in bold because this could be a big area. It is a big area for several of my clients. And I didn't see this coming. They say owner employees. They do not define what owner employees are, but they're thought to be corporate shareholders. Shareholders in an S corporation, shareholders in a C corporation, okay? What they're requiring you to do for that is look at your 2019 compensation level, okay? Get out your W-2, your W-2, look at box 5. That's the box I've been going to. What is that on your 2019 W-2? That's what you can use. You cannot use more than that. It doesn't make any sense to use less than that, but you cannot use more than that for owner employee compensation, okay? They have not defined it in the IRS code. Many times siblings are brought in. Attributed, they call it to owner employees. I can't tell you what owner employees mean. Hopefully we will get guidance on that. All right, we're ready to get into incurred and paid. And we're already over 45 minutes, Lisa. Incurred and or paid for non-payroll costs. And again, I'm sending you to the May 2nd and 13 pages of the May 22nd SBA form. It is either paid during the covered period or incurred during the covered period and paid on or before the next regular billing date, even if the billing date is outside the covered period. So what does that all mean? That all means you get more than 8 weeks. And this is the example right on, I believe it's page 13. It's either on page 12 or 13. So if you received the loan on June 1st, your 8-week period ends on July 26. The borrower may seek forgiveness on the May utility bill paid in June, the June utility bill paid before July 26th, the portion of the July bill through July 26th, as long as you pay it with the next billing cycle. And again, all of the above adds up to more weeks. What's interesting here, what they didn't opine on was, what about in June, when you received your money in June, if you paid your March, April, and May utility bills, were you behind? Are those all forgivable costs? Seems to me the answer is yes, because they say pay or incurred. Another very interesting thing here, and again, I'm referring you to page 13. Page 13 states that advance payments of interest are specifically excluded. So what they're talking about is July rent, or in this case, August rent, or August interest, September interest. You cannot take those, but they don't say anything about rent and utilities. So can you prepay? And it seems to me you can, unless it was really poorly drafted, that you can prepay and count as a forgivable cost your August rent and your September rent and your September utilities. So what's interesting here is recall that many people many clients I have are having trouble getting up to the other 25%, right? So here are some ways to apparently get to the other 25%, your 25% of non-payroll cost. It appears that you can pay, more than 8 weeks is certainly counted, and it appears you can prepay rent and utilities. Lisa, anything quick on this before I go on?
I just worry in the prepayment of utilities. I know that it's not been incurred, and I know it's an incurred or paid test, but that would just be the concern.
Okay, I've got a lot of people chatting in, which I really appreciate very much so. Okay, so let's talk about what they referred to as paid or incurred for payroll costs. Okay, again, it's going to exceed the 8-week period. I now refer you to pages 8 through 10 of the May 22nd release. They have defined paid as the date the paychecks are distributed or the ACH transaction originates. They have referred to incurred or defined incurred is the day the employee worked and the pay is earned, okay? I think what they're doing here makes it inequitable for people. We're going to see that on the next slide. Again, Ash, will you please see if slide 12 makes sense there, or anybody else who wants to do that. So what I did here is I try to make an example here. I don't know how to explain this any simpler than by going through an example. So our pay date is a Thursday. Our work week is Sunday to Saturday. The date of the PPP loan is April 21. April 21, Tuesday, April 21 plus 8 weeks is Monday, June 15th. And our alternate period, I think this ties back, goes from April 26th to June 20th. The assumptions are we only have a 5-day work week, and the payroll is $1,000 each and every work day. I've listed out the work weeks. I've listed out the pay dates. I've listed out what is either paid and incurred. I should be using my cursor here, correct? Listed out the work weeks. I've listed out the pay dates. I've listed out what is forgivable payroll costs under the 8-week election. I've listed out what I believe to be the forgivable cost if you are allowed to, if you so elect, the alternate pay period, okay? And you'll see under the 8-week period, I count that to be 9 weeks and 1 day of payroll. Under the alternate period, I count that to be 9 weeks and 0 days. Some practitioners have said, based upon the pay date falling and the loan falling and everything, you know, just following right, you can get up to 10 weeks of payroll in the loan forgiveness calculation. We finally come up to the loan forgiveness calculation. This is page 3 of the SBA form. Somebody make a note that should probably say page 3 of the May 15th SBA form submission. It is also included. It is in. It is one of the final pages of what I included in the PDF earlier today. This is the summary. You take your payroll cost, and then just for ease of explanation here, I only had one non-payroll cost. I had rent. You have pay rate reduction coming into a play. Line 6 is just add lines 1 through 4. Line 7 is the FTE reduction quotient. So we did not restore our FTE. We restored lines 8, 9, and we didn't restore FTE. So we have an FTE reduction quotient. And then you have a modified total, which is the math. Line 9 says put in the PPP amount. And line 10 says take your payroll costs, which are line 1, and divide by 0.75, okay? And line 11 is your loan forgiveness, smaller of lines 8, 9, and 10. This is a calculation. I'd appreciate guidance if people think there's a simpler way to do this. This is something you have to sit with for a few minutes to figure out if it, to figure this out. But what's interesting here is I'm gonna go over here for a second. Excuse me, notice that in the second column, in column B, certainly the rent is far in excess of 25% of our payroll costs, right? It's 35% or even more of the payroll costs, right? But what do we see? We see that, oh, sorry about that. I think I went forward. We see that the modified total is the amount forgiven, not the payroll cost divided by 25%. So when it gets to the point where we do this loan forgiveness calculation, put down all of your all of your non-payroll costs, lines 2, 3, and 4 being your non-payroll cost, to see what is forgiven. Very interesting to me the way this calculation worked out. You can see in column C, we finally get substantially over the 25%, and we are then limited to payroll divided by 0.75%.
Bob?
Yes, great timing. This is a great time to come in.
Could you just go back up to the calculation slide?
Sure.
This is the line 7, 95% FTE reduction quotient is what I was referring to before. It applies to, the 95% reduction applies to non-payroll costs as well as payroll costs.
Right.
And that was something I didn't appreciate initially. So that's why it's sort of a far-reaching reduction, as opposed to the pay rate reduction, which is more like on an employee by employee basis.
Correct. That's what Lisa is referring to right here, is this FTE reduction. If you don't restore that, it is a reduction on all of the costs that you have incurred. Okay. Schedule A worksheet. This again is in your package that I sent earlier today. It is the detailed payroll information. Payroll is reported in 3 areas. Just to give you a little highlight of this, or actually it's a low light because it's so complicated. Owner employees are going to be on line 9 of Schedule A. They are not on this worksheet. Table 1 of this worksheet refers to people who earned at an annualized rate of less than or equal to 100K for all 2019 payroll periods. A little bit confusion because what happens if you give somebody a bonus? That hasn't been defined yet. Those not employed in 2019, and note when you look at this schedule, if you aren't already doing it, this is where you worry about your salary or your hourly wage reduction. Table 2 is the same thing. You list the employee identifier, which is the last 4 of the SSN, and you list the employees there who are making more than $100,000 for all pay periods, for all 2019 pay periods. That's the verbiage right from the schedule. What's interesting here is if you have employees who fall under the FTE reductions, remember voluntary resigned, wouldn't come back, I believe this is where you list them. You would list them as maybe 0 payroll, but still 1 FTE. When you're doing these calculations, don't forget to put these people here with 1 FTE or whatever the appropriate FTE is for this person, for this employee. Again, working backwards, you also have PPP Schedule A. Again, in the PDF that I sent to you today, it is page 6. And you just got to work down the forms. You have the payroll summary. Page 1, lines 1 through 5 are from the Schedule A worksheet. They come up to Schedule A. Line 6 is health insurance. Line 7 is employee retirement. Line 8 is state and local taxes. Line 9, owner-employee compensation. And there's also a schedule there for lines 11 through 13. So I'd appreciate everybody's guidance on this. I figured this would go for an hour, and that's why as of now, I did not put in anything relative to these forms and the calculation. I'm assuming that this is best done in a subsequent seminar where we actually sit down and have fun with numbers and go through all these calculations and do a live example. What I'm going to try to do now is reduce this, and I want to see if I can bring this up. Does everybody now? Yeah, so these were the forms, these were the SBA forms that I included. Page 1, these are the certifications. Well, this is page 1 of the PDF, but if you see down here, it's page 4. Page 4 are these 7 certifications and the signature page. Schedule A worksheet. This is where you list the employees, those earning under 100,000, those earning more than 100,000, more than 100,000. They do some FTE safe harbor reductions here. This is the PPP Schedule A worksheet. This is where you list all of the compensation. This is all brought forward. Lines 1 through 5 are all brought forward from the Schedule A worksheet. Line 6 is the health insurance. Line 8 is the retirement plan. Line 8 is the retirement plan. Line 9 is the compensation to owners. Line 10 is the total lines. These lines go through your FTE reduction. And this all comes into, which is the lead sheet. This is the loan, PPP loan forgiveness calculation form, which is page 3 of the PDF that I spoke to. Lisa, I'm going to turn it over to you. I'm then going to go into the chat and look at some of the questions. I know a few people got off right at 10 o'clock.
One thing I'm wondering, Bob, and I don't know if anyone has any experience with this, is how payroll services are helping with this, particularly the employee by employee measurements of, FTE or payroll reduction. And I don't know if anybody has any experience with payroll services stepping up and offering that type of assistance.
Certainly they did great with the initial loan application, right? They did great into helping you put together all of the loan the payroll information to help you get the loan, the original loan application request. So, but this is really complicated, huh, Lisa? So, yeah, I'd like to thank our guests that are here. I'm going to ask them if they'd like to make comments to please unmute themselves. Brenda, we're doing this alphabetically. Brenda from, I shouldn't say that. Brenda, any comments?
No, I'm good. Thank you very much, Bob. It is incredibly complicated at this moment, and not really having final guidance is a little hard.
Yeah.
So.
Any way to make this any simpler? Should I have brought the SBA forms up sooner?
No, I really, but and again, like I said, not having any final guidance is what's making it the most complicated.
Excellent. Thank you, Brenda. Thank you for attending.
Thank you very much.
Ed, you're up. Go ahead. Beat me up good, Eddie.
No, your materials are very well laid out, Bob. Good details and good walkthroughs on some of the calculations. So very much appreciated. Good job.
Okay, you can sign off because now it's Jenna's turn. You don't want to hear what Jenna's got to say. Go ahead, Jenna.
No, Robert, I think you did good. I like the walkthrough. I thought you were very detailed. Again, I mean, it's just waiting until everything is clear for sure. Other than that, I think it was good.
Okay.
Was Doug on the call? Doug Thibault, did he hear that glowing recommendation for you, Bob? I just want to make sure.
Well, he did, but Doug has selective hearing, I think, Ed, so that's okay.
Bye, Robert. Take care.
You guys. Thank you so much. So I believe now everybody left are only MP employees.
No, for some reason I'm still on here. I can't get out, Robert.
Oh, you
I'm
can't
hitting
get out.
leave and it won't go.
You can't leave the presentation?
No, I'm being dead serious. I cannot. I'm clicking the leave button. I'm hitting the X button. You won't go away.
That's a real truth, isn't it, Jenna? Does anybody else want to share comments over this platform as opposed to seeing me? Now it says Jenna has left, so she figured out how to do it. Anybody want to share comments over this? Again, my big hangup was, and it's not easy for me to do since I'm so computer illiterate. Was it easier? Was it hard? Should the SBA forms have been brought out earlier? Maybe even at the beginning of the presentation.
Bob, I find that the SBA forms are not like tax forms because the SBA isn't the IRS. So I think we're all used to seeing how tax forms work. And these are like, I think, incredibly disorganized, these forms. So I would not dwell on them because you really have to study them. You can't just like glance at them and figure them out. That's my opinion.
Okay. So would you not even bring them up at all, Lisa?
I would, just to give people some familiarity, but I wouldn't try and like rip them apart because they're confusing.
Yeah, agreed. It's a whole seminar in amongst itself. Again, I wasn't sure how long this seminar would go for. So, but I see it's over an hour, certainly, even with a little bit of joking around we did.
Bob, there are a couple of questions that came up in the chat that I don't know if you want to answer or you could enlighten you.
Okay.
Want me to tell you what they are?
So the only new one that I saw was Laura from 946. Alex has got a comment that says, sometimes I use 15,384, sometimes I use 15,385. Hey, Sammy. So Sammy has a great question here. What about guaranteed payments on partnerships? Sammy, I think what they did is they made it extremely complicated in that it appears you have to get every partner's, or you have to know what every partner's SE income is. or maybe you just take their SE income times the 0.9235. It doesn't appear to be a simple calculation. So because guaranteed payments are in SE, I think they also qualify.
Mhm.
Hey, Bob.
Yes, Patrick.
Bob, couple things. Nice job. I agree with Lisa that the pulling up the forms just so people can see them is helpful, but not dwelling on them.
Okay.
I've had a couple questions that have come up. One is, can bonuses be paid to employees and qualify during this period? And I think you covered that people could get paid hazard pay. So I suppose that could be considered hazard pay.
Yeah.
But also, can bonuses be paid to shareholders? Let's say they're making more than $100,000, and this might just be your opinion, is if an employee, or I'm sorry, a shareholder making more than $100,000 is paid a bonus or a distribution during the period or right after forgiveness, is that going to be a problem for them?
If you have the funds and you needed the funds to operate your business, I mean, I don't know that so my concern is paying distributions and bonuses to owners' employees shortly after this was done. Could they make the case that you didn't need the money? That would be my concern.
Yeah, and currently, as I understand it, the SBA is only looking at those loans in excess of $2 million.
I think you are presumed to need it. Treasury pushed, there's some guidance out there, Patrick, that it got pushed back on a little bit. They said, don't think if you're under 2 million, it's carte blanche, is what they said.
Yeah, Bob,
It might, somebody else is.
They're proposing to drop the limit down to $1 million now.
Is that what they're doing?
That's what Phil and I were talking about yesterday. We saw something online. I don't know if it's one of the proposals going through or maybe on the Senate side. I'm not sure.
Yeah. Yeah, they're trying to push. I think what they're trying to say, Patrick, is you have the presumption that you needed it unless we prove otherwise.
Yeah, I read somewhere the Treasury might want to lower that $2 million sort of safe harbor and make it much lower. And then I think they came back with maybe $1 million like official safe harbor, like a hard safe harbor of $1 million. So I don't know. I think it's still up in the air.
Okay.
Thank you.
You're welcome, Patrick. Thank you. Donnie Smith, wait a minute, one second. Lisa, 1 second, please. When is the form due to SBA? No due date, Donald. No due date. It's still up in the air. Tammy said for loan forgiveness, prepayment of utilities would be advantageous, especially for rent and utilities, not billed on regular intervals. Okay, Sammy, thank you. Lisa, go ahead.
I was going to ask you to look at Sam's question because I'm all hung up on prepaying utilities, but certainly purchasing fuel and incurring the costs, that would definitely qualify.
Purchasing the fuel.
Like he's saying purchasing oil or propane, or Sam, are you saying like, fill up your tank, or are you saying prepay it?
Fill up your tank.
Yeah, I don't know about that. Because the cost hasn't been incurred.
Yeah, but Lisa, it's incurred or paid.
Then why in the payroll can you only use costs incurred for the last day of the covered period?
Again, yeah, the only thing I can say to you is why did they specifically, subject mortgage interest to the limitation, but not the other items?
Yeah, right. So you're inferring because they spelled out the mortgage interest that they don't mean to include utilities.
Mm-hmm.
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 I mean, don't usually like oil and propane. That's some inherently you have to kind of pay in advance.
But it's interesting. When you think about these things, both Associated ABW and Gagliarducci both have fuel tanks at their place. And what's interesting about them is they actually have fuel contracts. So Now that I think about it, I mean, how do you allocate that, I wonder?
Oh, so in essence, they buy the fuel, they buy fuel at a specific rate, even though they're not storing it on their premises.
Mm-hmm.
Yeah.
Mm-hmm. Anybody else?
Bob, Al here.
Never mind. Okay, next. I could hear Phil.
I sent you an email. I think you have to insert the HR 7010 changes into this presentation. It's going to be pretty important for everybody, obviously.
Okay, wait a minute. First of all, Phil laughed. I could hear him 2 offices away when I said, never mind, Al. But secondly, when you say HR 7010, are you talking about the House bill?
Yeah, the one that passed last Thursday.
Okay, so the Senate hasn't passed that, correct?
Yeah, but it passed with 471 to 1, and expected to fly through the Senate. It's expected to go through. I think we have to assume that's going to be the new law pretty soon.
So, if it was Al, and again, I certainly expect an increase. I certainly do. But if it's going to fly through the Senate, why hasn't it?
Because before they got, I mean, it was Memorial Day weekend Thursday, and everybody was disappearing. But it's going.
No. Stop for a second. The House bill passed after Memorial Day weekend. Last Thursday, I think it was. Last Thursday in the morning is when I sent my email around. Right. So the Senate has had Thursday, Friday, Monday, Tuesday, and here we are on Wednesday, and they still haven't done anything. And what I've read from Rubio's is still not at 24 weeks. He wants to be at 16 weeks. I don't think it makes a difference unless you're a shuttered business, right?
Well, if you have any kind of
hold on, Mnuchin is still at 75%. One more point that I'm going to let you talk. And Rubio has said the way the House bill was drafted, it was poor in that if you didn't make enough payroll, it eliminated any forgiveness. Your floor, sir.
The provisions in there will waive the FTEs for anybody that is unable to rehire the employees that they laid off, or similar qualified employees. Also, if for any reason you're unable to get back to the level of business because of COVID safety restrictions, if you can only use 25%, 50%, other limitations, rearrange your restaurant with more room, all those FTE rules are going to be waived. And obviously the number of weeks, I mean, if you can take, 16 or 24 weeks worth of utilities, you're going to get a lot closer to that 40% instead of having to worry about the 75%. And I think we've got to caution anybody at this point that's thinking about applying for the loan forgiveness after 8 weeks to wait. I think we should at least be pointing that out, because the odds are they're going to get a higher calculation on the forgiveness under the new rules.
That's a very valid point. One question as to what you just said. Why did you used utilities as an example for 16 weeks, but you didn't use payroll as an example for 16 weeks? I mean, if they move it to 16 weeks, wouldn't payroll be the only thing that you need to put on the form, basically?
Yeah, I think this whole calculation is going to be almost mute, because it's going to be so easy to soak up, what was it, 12 to 50 seconds over a longer period of time.
Yeah, and that's why I'm so pissed off at the Senate, because if they'd done something, I wouldn't have had to put all the time into doing this.
Well, what I'm saying is I think we have to caution anybody from filing at this point for forgiveness if they're not, 100% maxed out.
Point taken. Point taken.
I'll be talking to Richie this afternoon, and I'll check with him what he thinks it's as far as going through.
Okay. You can't talk to Rubio?
I think head of House Ways and Means should have a better idea. I don't know. He's a senator. He's going to vote.
Anybody else? Anybody else not named Alan? All right, thank you all. Ashley, were you on this? I didn't see your name.
I'm here.
Okay. Were you updating slides as we were speaking? Are you in the process of updating
I
slides?
can update them right now. I made the notes. I did not update them while we were speaking, but
Okay.
I can.
Actually, on the payroll slide where I put hazard pay,
Yeah.
put bonus before that.
Okay.
Insert bonus there, please. Oh, by the way, while just about everybody else is still on here, just like I did this morning, I'm going to want you to send to all your invited guests both the let me be specific here. Around noontime, I will send out a new PowerPoint deck and the SBA 4-page guidance. Once you get that update, let's send it to all our clients either this afternoon or tomorrow morning to remind them that tomorrow is the true presentation at 9 o'clock, okay? Don't forward what you have now because obviously there's corrections. That's why we did a trial run. But my guess is hopefully by noon, 1 o'clock, we will have something for everybody, okay? And Melissa's gone. Melissa didn't hear that.